Welcome to Caliente Topics. This is your daily tax webcast. My name is Veronica Rosso from MNMTaxman.com, and I have Patrick Rosso, EA, as well from MNMTaxman.com. And on today's webcast, we're going to talk to you guys about home office deduction, right, Patrick?
Very good, Veronica. Good morning, everybody. The home office deduction. Probably nothing more brought more sadness and surprise to our clients this tax season than to hear that there is still no home office deduction if you are an employee that has a regular day job. Unfortunately, they didn't change the provision of the 2017 TCJA, which, if you recall, since 2018, they suspended that miscellaneous itemized deduction subject to 2% of your AGI that you would claim off on your Schedule A. Those job expenses were still suspended. And with the shutdown, COVID-19, the mandates to stay home, a lot of remote working, a lot of our clients felt that there would have been a change that would have happened in time for the 2020 tax return, and that unfortunately did not happen. However, we're keeping our eyes peeled. Papa Joe Biden, one of the big topics is the home office deduction for remote workers. So we are expecting a change in the rule by year end. We'll keep you posted. But the home office deduction does still exist and can be claimed if you are a sole proprietor or one of these single member LLC owners that file as a disregarded entity using that Schedule C. Veronica, easy question. How many different methods are there for claiming the home office deduction?
2.
Very good. All right. So I know that there's the simplified and then there's the regular. Let's start off with the simplified real quick. Now, I know that with the simplified, you only need the square footage of first the main home and then the dedicated area that's for the exclusive use of the office. Now,
correct.
What is the maximum square footage that you can claim in a year if you choose to use the simplified method?
300.
Very good. Now, reading the rules, for each square foot, the government will give you a deduction of $5. So what's the maximum that you can claim in any situation using the simplified method?
About 1,500.
Excellent. Very good. Now, the regular method, you need to know a lot more. You need to have all the basic bills that you carry for the house to include the mortgage payment, property tax bill, insurance, the repairs and maintenance, even the utilities come into play. Not only do you need to know the square footage of the exclusive use of the office and the main home, you use that allocation in order to take a deduction for all of those indirect overhead expenses that you have just on a monthly basis to carry the house. Now, what about depreciation? Veronica, we get this all the time, and the reality is this, is that if you do choose the regular method of deducting your home office, the depreciation of that dedicated space is required over the course of a useful life of a commercial office. Second question, useful life in years. What is that in the IRS for depreciating in home office?
So 39 years.
Very good, Veronica. It's 39 years. So although you do have to depreciate, why do I say do? Because the rules actually say in the course of depreciation is that it is a deduction that you either took or was supposed to take, meaning that in 10 years from now, when you sell your house, and the accountant tells you that not only you're not going to get fully protected from that with that Section 121 IRC. Remember that home sale exclusion? If you're single, you can exclude the first $250,000 of the gain.
Married,
if you're
500.
married, double that to $500,000 of the gain, mind you. Not just the sales price. So that covers a lot of people. That would not cover the years of depreciation expense that you would, of course, be keeping record of. That's part of taking the regular option of the regular home office deduction is now the record keeping tracking that you would have to be mindful of to include how much every year you've taken off as a depreciation. Why? Because there's a recapturing mechanism that has to take place. Now, why isn't it such a big deal for a lot of the clients to claim that depreciation? Because you are talking about that small, minute percentage of the house that you're claiming as your office over the course of 39 years. And so that annual expense is typically less than
Very
a couple
small.
$100, if
Yeah.
at all. And you're looking at a very low impact towards the end of your ownership. So it isn't something that really most clients protest taking once you explain to them. If I have to take it, then that's the way it needs to be. But it usually has a very low impact on what happens on the back end on the sale of the property. So reality is that this is something that we believe is going to change drastically with the new Papa Joe Biden tax cuts and credits and deductions that should be flowing through the pipeline within the next couple of months in time for the 2021 tax season.
Hopefully.
Last points.
Hopefully it changes, since once again a lot of people working from home, and I don't want to see their faces saying again we can take this deduction. So hopefully that changes.
Absolutely. Very good, guys. We'll continue the discussion on home office deductions for the sole proprietors or the single member LLC owners, talking about limitations. Is there a income limitation or other factors that could limit how much you could claim in a given year? Guys, a quick way to get a quick answer is by using the comment box below. Don't just subscribe to this channel, even though we will be doing this pro bono tax workshop on a daily basis, but lend your voice to the show. It'll make it a whole lot more fun. Guys, have a great Hump Wednesday.